Hey everyone, before we get to the charts, the Chart Guys has a swing report service that is sent out every Sunday night, focused more on entries for swing trading rather than shorter term trading. And we're doing a webinar on that this Thursday, 5 p.m. Eastern. And that will be a public live stream on our YouTube channel. And at the end, you can sign up to get additional information and have a discount code sent to you. So we will put the link for this live stream in the comments of this video. And we will see you Thursday, 5 p.m. sharp. Hey everyone, checking in on the broader market as we get ready for the FOMC tomorrow at 2 p.m. Eastern. We know that's going to dictate a lot about how this week ends up. And as I keep mentioning, I care more about the reaction on Thursday with a full day of trading when big money has time to move big money as opposed to an illiquid 2-hour reaction on Wednesday afternoon. There's still going to be opportunity on Wednesday, but Thursday is going to be the telling sign, and oftentimes it's the opposite direction of the reaction we get on Wednesday. So as we know, the market is likely to anticipate to react to a 50 basis point hike as bullish and a 75 basis point hike. I wouldn't necessarily say bearish, but if we're going to see a bearish reaction, it would be on a 75 basis point hike, and it would be on Powell's comments remaining hawkish, in my opinion. The market is just looking for any kind of shift and any change in tone to be looking at a possible bullish reaction. But in the end, I'm not going to be doing a whole lot tomorrow afternoon as far as trading is concerned. I'll try some potential day trades on the reaction. Once I get a clear level to play off of, I look at the 1 minute time frame. I look for the initial reaction. Sometimes we reject or bounce off of the high or the low of the day at that point initially. But it's always with a stop loss, and it's always smaller position sizes because of that increased volatility. But for the most part, I'm just looking for information and clues to tell me about my swing bull positions. I am going to be holding some of them through the reaction, and it's either going to be a red flag as far as the potential of our weekly lower highs being set. If we get a bear reaction, we're going to see weekly consolidation potentially shaping up. And if it's a bull reaction, then the weekly bounce will get another leg up, and we'll then have a good amount of space for a weekly trend change attempt to try and take place from there. So that's what I'm watching for. And today we had a gap up open, and bears controlled the day. And the narrative is staying the same as far as what's going on in the market, which is tech sector weak, dragging QQQ, the NASDAQ down, while other major sectors are keeping bulls in the S&P 500 holding on a bit stronger. So there was a nice bear setup here first thing this morning. And as I mentioned in the video yesterday, we keep getting examples where SPY will break a resistance level and see no follow through because QQQ did not break the resistance level. And it happened again today on the shorter term time frames. SPY broke resistance right here, and QQQ did not. So QQQ actually was back here. So another one here with QQQ failing a 5-minute resistance test at 11:30. And if you're only watching SPY at that point in time, SPY confirmed the first 5-minute uptrend of the day straight into a new low of the day. Again, if you are not watching QQQ, SPY bulls are getting faked out often over the last few days. So SPY at this point in time, for me, the key short-term support is 379.33. If that level holds, the daily uptrend remains nice and strong. We can look at the S&P 500 futures chart as well for a little bit of clarity. And same thing there. A little bit more clear of a pivot on the futures chart for that daily high or low. One thing that stands out to us is the last higher high that we saw is lacking bull follow through. So knowing that we know that weekly consolidation is going to be inevitable and that we have to confirm a weekly trend change for significant follow through, any sign of weakness on the daily chart, we're paying extra close attention. But again, Powell's going to dictate things here, and the reaction to the FOMC is going to dictate whether the daily uptrend continues or whether it's at risk of being lost. So the NASDAQ had a nice setup here for bears on the morning. We were watching the 15-minute uptrend all pre-market, and we were watching for signs of the 15-minute uptrend being lost right at our 4-hour resistance. I was viewing this as just a big equilibrium with a big drop, a big bounce, a higher low, and this is where we stood pre-market. So bears had a top fishing play. So I entered SQQQ this morning on that top fish play. And we ended up rejecting from resistance and breaking support. So that's another win for the NASDAQ bears. Looking at it on the daily perspective, we set a daily lower high. So higher low, higher high, higher low, lower high. Now the question is, are we going to drop down and lose the daily uptrend and confirm a daily downtrend, which would be a weekly bear flag? The NASDAQ is rejecting from weekly EMA 12. So if you are a bear, your main thesis is look at tech and look at the NASDAQ, because that is clearly the weakest. And if you just look at this weekly bounce and you compare it to XLF and XLV, they are night and day differences. So if you're making a list of, what's the main thesis for bears, aside from all the fundamentals, if we're talking technicals, it's QQQ. And if your main thesis for the bulls is, well, look at all these other sectors, the energy sector and healthcare and all this. But the NASDAQ is the captain of Team Bear right now. And we saw individual names like Amazon. We knew the most likely result of this bounce is a daily lower high. And here we are confirming a daily bear flag with a ton of weakness on Amazon. Google, we knew that the most likely result of this bounce is a daily lower high. Double top at the high of yesterday, inside bar bear break, and a daily bear flag confirmed. Meta's trying to get a bounce going. We know it's been very weak, but guess what? When that bounces, we know that we're scouting a daily lower high as the most likely scenario. So cannot stress enough, identifying most likely scenarios and then observing them. And again, it was like that NIO trade from last week where I was away when it actually played out. But I was talking about it all last week where we know we're looking for a daily lower high. And when we top out, it's an easy 10% pullback. And this ended up being, I think, a 16% pullback before we set that daily high or low. NIO with the gap up open. Nice tightening range right now. So we know NIO volatility is coming. The other Chinese names are set up the same way. Baba tightening. Baidu tightening at this point. Baidu earnings reaction. No, not sure if that's today or not, but tightening ranges on the Chinese names with the burden on bulls. But as far as QQQ is concerned, it's all about this level. If 284.18 does not break, it's a big win for the bears. That level must break. And I guess we'll call it 284.60, which is the higher of the double top level there. But if I'm a bear, you can stay bearish on the NASDAQ and related names as long as 284.60 is resistance. And the fact that we dropped to lower lows on Amazon and Google is a good sign for bears. Those daily downtrends are following through from the earnings reactions. Semiconductor, actually the dollar. So another reason that I was looking bearish this morning is because the dollar was looking for a 4-hour high or low on anything over this support. And look at where we bounced. We kept the 4-hour uptrend intact. I would not have anticipated that we could have headed to a higher high as the more likely scenario, but we did. So the 4-hour uptrend is my guide on the dollar as I'm scouting a daily lower high, anything under 113.94. Again, the FOMC reaction is going to dictate whether we're heading up towards that resistance or whether we set the daily lower high and head back down towards support. Semiconductors, gap up open today. Still, again, just a slow grind up. The bulls are keeping the grind up going. That's clearly happening, but it's just not confident at this point. So we did get a new high at the bounce, 193.75, but we are also on the verge of daily consolidation here. And again, we know that we're in a weekly downtrend and clearly setting weekly lower highs still at this point. Tesla, gap up open to confirm the daily trend change, but broader market weakness had it pulling back all day from that strong open. We know that Tesla is just looking for a weekly lower high as the most likely scenario. So what do I do with that information? It means I scout for signs of weakness on the daily for a weekly lower high to be shaping up. Right now, we have a confirmed daily uptrend with zero follow through, which is the hallmark of a bear flag. Obviously, we need a bearish reaction to Powell if that's going to be the case. But if we didn't have Powell right now, I would be saying, Tesla bears are keeping an eye out for the potential that a weekly bear flag is shaping up here. Healthcare still strong. We did lose the daily stair-step pattern, but into a very notable bounce. So loss of the hourly uptrend. And there's two ways that you lose a trend. Well, there's really one way. You lose the higher lows. So let's distinguish. Right now, is XLV in an uptrend, an hourly uptrend, or an hourly downtrend? The answer is neither. How can it be in neither? Well, we were in an hourly uptrend on this daily bounce with a stair-step pattern of a higher low every day. We lost the hourly higher lows this morning. All right, uptrend gone. Have we confirmed an hourly downtrend? No. To do so, we have to set an hourly lower high and lower low, which has not happened because we had a solid bounce. So from here, if the bulls regain the hourly uptrend, it's a daily bull flag. If we don't and confirm the hourly downtrend, we look for further daily consolidation. So you can look at the daily chart. This is why the details are so important. You can look at a daily chart and you can't identify whether we have confirmed an hourly downtrend or we have just lost the hourly uptrend. Those are two different things for me. They determine what I'm looking for next. I have more confidence in downside action if an hourly downtrend has been confirmed. If the hourly downtrend has not been confirmed yet, I am more cautious as a bear because the bears have only had one little check mark and they still have proving to do to convince me that daily consolidation can get some follow through. The financial sector is still in a daily stair-step pattern, higher low every day the last 7 days. Again, bulls looking a little bit tired, but also a ton of space. And this is where I said, even if we have a bearish reaction to the FOMC, we're going to be scouting a higher low on the daily for XLF. XLF can pull back 8% and still be in a daily uptrend. Healthcare, XLV, can pull back the same 7% and still be in a daily uptrend. So if we have a bearish reaction to FOMC and the market all drops 3.5% over the next 2 days following it, we're scouting daily higher lows in XLF and XLV. So we're not going to forget that. It's just a question of if we get a bearish reaction, is it big enough where we're going to then be scouting a daily lower high to be the result of the next bounce? Just one at a time, but keeping all of this in mind. It's a lot to keep in mind, huh? Don't be afraid to write stuff down. IWM, keeping the bull move up. So again, you look at the day for IWM, XLF, and XLV, and it's an extremely different day than what QQQ saw today. Still have not started daily consolidation, still hitting higher highs on this bounce. Gap to fill at 187, and I would call anything above 168.19 a daily higher low next pullback. Biotech sector, double top at resistance. I longed the biotech sector on the market bounce because we were seeing some relative strength. Recognized red flag not breaking the double top at daily resistance and then stopped out. But from there, then scouting the hourly lower high to be the result of the next bounce. And we're in a standpoint right now. We're on a lot of names. That's where we stand. Amazon, we're scouting an hourly lower high next bounce. Google, hourly lower high next bounce. That's all I got off the top of my head, but there's a handful of them that dropped enough. Tesla, hourly lower high to be the result of the next bounce, anything under the high of today. So if we open higher tomorrow, I'm scouting an hourly lower high. If we open lower tomorrow, I'm not going to be making bearish entries. I'm going to be waiting, and again, this is all disregarding the FOMC, but let's just pretend it's a normal day. If we open lower, I'm waiting for a bounce to scout an hourly lower high. I want to be scouting the most likely scenarios on longer term time frames and then zooming in to pinpoint that those most likely scenarios are taking shape. And that right there, that 1 or 2 sentences, whatever I just said, was the biggest game changer for me consistently day trading and profiting as a day trader once I grasped that concept. And obviously the backbone of that concept is understanding the ability to identify trends, the ability to recognize patterns that show you trends are changing, head and shoulders, rising wedge, and I should say, how the time frames interrelate with each other. Canopy. So we had a bearish news reaction. Canada came out and said, cannabis sales pretty much aren't growing. And so we had a bearish dump pre-market and we dropped hard and then we bounced into the open and then we dropped hard at the open. So bears had an opportunity here. So let's go over what I just talked about. What's the most likely scenario? So you see this dump from the high of yesterday of 389 and we dropped down to 331. So that's a pullback of a lot of percent. How many? I don't know, but a lot. 15% pullback. What is the most likely scenario when we bounce on the hourly from here? An hourly lower high. We know it. Unless there's news, unless there's big bull volume out of nowhere, an hourly lower high will form at the end of this bounce. How do we pinpoint that hourly lower high? We zoom into the 5-minute time frame and we look for an indication that 5-minute lower highs, or I should say that the 5-minute uptrend is being lost. So I'm just pulling up messages now. So I start by saying CGC hourly bounce is clearly underway. Anything under the high of the day is an hourly lower high, and I'm watching for signs of the 5-minute rising wedge for clues that a lower high is shaping up. So I'm scouting a bearish pattern on the 5-minute to show me that that hourly lower high is shaping up. I then recognize, wait just a minute, it's not a rising wedge. It's a head and shoulders. So I then say, 5-minute head and shoulders watch. And the right shoulder formed to perfection. We failed 358 by 2 pennies, very low risk top fish, and that was the high of the day. Granted, it's not a huge win, but it's enough of a win to make your day. We're obviously not going to nail tops and bottoms, but that's a 3% pullback. So if I get half of that, that's 1.5%. And I know a lot of people with small accounts might be saying 1.5%, who cares? That's nothing. If you put in 1% a day, and if you compound and size up your positions, you will be rich faster than you can believe. You're not going to be able to do that because it's extremely difficult. Do not scoff at 1%. 1% is great on a daily basis. But it was a nice example of hourly lower high most likely scenario. Zoom into the 5-minute and identify it. And as I mentioned, I tried to short here, but Fidelity didn't have any shares. So I grabbed TLRY short just based on that and covered some and then covered the rest. And so that was a solid win. Gold bounced today. Silver is much stronger than gold. Daily uptrend continues. Miners stronger than gold. Daily higher low set. Gold's got to get its act together and hold this bottom. Weekly downtrend is staying intact at this point. So it's going to be based on Powell and the Fed and the dollar. But if I'm going to be playing anything related to the metals, it's either the miners or silver because of their relative strength. Oil, daily higher low set. So in the video yesterday, I said, we need to set the daily higher low today. And we did. Bulls heard me. So 85.30 is set. And now it's all about 89.79 for the bulls to try and see continuation of this hourly uptrend, to try and break 92.34 to confirm the weekly uptrend. Just use the daily uptrend as our guide. If we lose the higher lows, it's a red flag. If we keep them, the bulls keep control of this bounce. Natural gas. Daily trend change with zero follow through. What does that mean? It means red flag, zoom out and scout a weekly bear flag. That's a weekly bear flag. The burden is on bulls to prove to us that it is not by breaking 585 to try and follow through on this bounce. But it's a big setback with the size of the drop here because now we've got space for a 4-hour lower high to be the result of the next bounce. That's where we stand. All about Powell and FOMC. I appreciate you watching, and we'll check back in tomorrow. Do good things. Majority of the maple and poplar and all these trees are down, and now it's just the willow, oak, and cypress that are yet to drop.